So, Glyn, I was taking a look at your education background on LinkedIn. I noticed you're quite an underachiever. You've only done a Bachelor of Commerce in Accounting and Arts in History. You only won a prize for Chinese Studies. You only did a postgrad certificate in Software Engineering. You've only been to the London Business School and done a Masters of Finance, and you've done a an advanced management course at the University of Chicago Booth School of Business. So quite, I'm being facetious here, but you've got quite a lot of educational experience. Was there a reason why you pursued those different courses?
Yeah, thanks, Peter. The nature of these courses in these shiny schools, if you pay enough money, anyone will let you in. So I'm not sure it really says all that much other than paid the money. But I think for each of them, there's been something where I've become quite conscious in the work that I'm doing relative to where I want to go. I'm not sure I have the skills I need.
Hmm.
So the question always becomes, well, if I want to get to that place and there's a set of skills I need to build to get there, I need to be credible to other people that might give me the keys, so to speak, into that new role, or to perform that new role, then I better go and acquire those skills. And there's obviously different ways to acquire them. And if I do one contrast of when I went to many years ago now, I went to LBS to do a master's in finance. And at the time I was thinking, well, do I just do a CFA, which wouldn't cost me very much money? Or do I go and do a master's in finance?
Hmm.
And frankly, I think the curriculum is very, very similar. Master's in finance cost a whole lot more. CFA, very robust, but the underlying curriculum the same. And I recognized it in myself. I was already working quite hard in an investment bank at the time. And I was probably at maybe 60 hours at the office.
Yeah.
And I thought to myself, do I have the self-discipline to do a CFA? The
Hmm.
self-discipline to be that motivated when I'm already working quite hard
Hmm.
without anyone telling me what to do, without any exams, without any assignment other than you're sitting an exam
Hmm.
in 18 weeks, go and do the X many hundred hours required. Will I
Hmm.
actually do it? And
Hmm.
I think I hats off to those people that do. I looked at myself and said, you won't, Glyn. You'll want to go for a run on the weekend on Saturday afternoon when you knock off from work and go and have a beer with your mates. And the only way that I would is if I spent a truckload of money and I had lectures 3 nights a week and assignments due every week. And
Hmm.
so for me, sometimes choosing that educational route has been a more expensive route, but it's been a tool in self-discipline because I didn't really have the discipline. So back to your question, it's always just about filling a gap. And then what's the way for me to go and do it where I'll actually do the work
Yeah, sure.
as opposed to talking about doing the work.
Sure. So it looks like you've used all that experience. You've worked at a number of different banking organizations, large ones. 14 years, I think you spent in banking and finished up as a managing director or as a general manager. So in 2022, though, you've taken a very different path. You moved out of traditional banking or investment banking. You've moved into a new area. Do you want to share what made you move into this new career path? Like what was it? I'll let you share exactly what you got involved with, but sort of what
Sure.
are you getting involved with and why did you make that transition?
So I'll start a little bit with the why. So there's a push and a pull. The push was sort of a recognition that particularly in corporate banking as opposed to institutional banking, the skills that you need to thrive at the most senior level, I just wasn't sure I had, frankly. In more an investment banking environment, I felt that I could compete, so to speak. But in the corporate banking, I thought there were skills around navigating the organization that there are other people who are just better at it when it comes to networking inside the organization, building those relationships of trust.
Mm,
And some people would call it politics. I wouldn't use that word. I just call it just influencing inside the organization to get things done,
mm,
making the necessary compromises. And there are people who are just better at it than me. That layer of the organization, particularly, frankly, for white men, is shrinking. So I looked at it and thought, well, if I'm going to stay here for the next 10, 12 years,
mm,
all through my 50s, then will I be able to? And I
mm,
felt that maybe not.
yeah,
I so that was one thing that was sort of pushing me out. And probably the other is I felt that my rate of learning was slowing down a lot. So my last 5 years of banking, and this is a little bit on me, I was searching out and I got to work with lots of wonderful people, but I perhaps just wasn't learning at the rate that I wanted to. I wasn't often going into work thinking, I have no idea how I'm going to get it done today. I might be struggling with certain relationships and how to influence to certain outcomes, but the actual underlying substance I wasn't struggling with, and I wanted to feel that. So that was some of the push. And then the pull, I've always been really curious about working in a more entrepreneurial setting. I've been really curious about working in an environment where I have more ownership over the P&L and commercial outcomes. I've always felt that in the bank, for the most part, I was a pontificator. My job was to read the financials, interpret them, and then tell a business leader, well, really, you need to find a way to make your expenses less and grow your revenue. And deliver those revenues with higher efficiency, and please use less capital while you're at it. And I try and make some intelligent sounding commentary around that. But for the most part, I was a pontificator, and I'm not sure I was particularly effective at driving very different outcomes. So I was eager to be in a position where I had to go and develop a product. I had to sell the product. I had to find customers. I had to actually do the business part of business. So I was eager to do that. And I was also eager to do it in an environment which had relationship to entrepreneurship and to digital assets. I think there's enormous amount of change, and still is, around digital assets. And I thought it'd be a really interesting part of the industry to be a part of for the next 10, 15 years. So with all of that, I took the plunge, which was scary and remains scary, to walk away from the safety bosom of a monthly paycheck. I invested a substantial amount of money of my life savings into a business, which was called Icebreaker Finance. That business, unfortunately, has now failed, which is a very humbling experience in itself. I've launched another one, and I'm doing that. So I'm spending my time in and around capital markets and DeFi, and at the moment I'm focused on a Bitcoin denominated debt offering for a US corporate called Cormant, which will be the first corporate in the United States ever to use Bitcoin denominated debt, from what we understand, as a corporate treasury financing solution. So we're doing a Reg D 506C offering. So we've been busily structuring that, market testing it, and we started the sales process last week. So that, and I'm still involved in a couple of DeFi protocols where I spend some time.
Yeah, sure. So it sounds like you've gone from an FP&A role in finance, like in the traditional finance role, where you try and help the business make sense of their finances, like you mentioned. And you said that you got interested in digital assets. When roughly did you get interested in that whole space?
I started playing around 2015.
That's early.
And been curious and bamboozled by it. Lost some money through it.
Haven't we all?
Yes. And I think I've swayed between being caught up in the speculative hype to being really curious about the underlying technology and its applications. Yeah. So it's a constant journey, changing. Probably now I'm spending almost the majority of my time in the Bitcoin ecosystem.
Got you.
And in and around Bitcoin mining, although I still do some work with a prominent gaming DAO, which leases NFTs to players. Yeah. So but I think it's a sector which is just changing so much, constantly. So extremely stimulating. I'm not sure it's consistent with, at the moment, we're generating a sustainable income, but it's certainly interesting.
Yeah, interesting. So that's 2015. That's really early. But for you to take the plunge into not just being an entrepreneur, but being an entrepreneur in the digital asset blockchain space, that's quite a significant leap. So you must have had quite a high level of assurance that this is definitely part of the future, like the industry that you're getting involved in. Because let's face it, most small businesses, or most businesses, apparently fail. So not only to become an entrepreneur, but entrepreneur in this area, what gives you the confidence that this is the area where you want to sort of devote, you mentioned your life savings to, or a significant part of it. What sort of drove that decision, and still
Look,
drive that decision for you?
yeah. So particularly in the Bitcoin ecosystem, where I think many of the Bitcoin OGs will don't see themselves as part of the broader crypto community. They see themselves as very much a distinct community, and some of them have a level of conviction that in Bitcoin as a store of value, and that it will have other sources of utility, and as a path, they'll use language like economic freedom. They have a level of conviction on that is verging on religion. It is deeply, deeply held, and like the sky is blue. While I can understand that view, I probably don't relate to it with the same level of conviction. But I see it as a material probability, there is a material likelihood that in the next 5 to 10 years, adoption of Bitcoin as an asset class, as a store of value, will grow. In the same way that many financial advisors today would recommend an allocation to gold, silver, and precious metals of between 2 and 5%. If someone said to me, what's the probability that 10 years from now, those same financial advisors would say gold, silver, and Bitcoin? Well, I think that's odds on that will happen. Do I think it's 100% likelihood? No. So to your question of, I feel it's probable. And it's certainly very interesting, and there's a lot happening around that, whether it's subscriptions, the layer 2s, the scaling mechanisms, which I want to be involved in, and I think Bitcoin capital markets are really interesting. But I don't for a second have a die-hard conviction that it's 100% going to happen. I think it's going to be extremely volatile, and I didn't go into this to make money. So while I would like to make money and I need to make money, I think if I was doing an expected return of how to spend my time in the next 10 years, I should have stayed in the bank. Picked up a very nice paycheck as a vaguely senior person, almost like an annuity income stream, and done it for the next 10 to 12 years. I think the expected return of that would be substantially greater than what I'll generate in the next 10 years by doing what I'm doing. But I suspect I'll have more fun. And as someone who's approaching 50, and unfortunately I've had seen a few people get cancer and all kinds of I lost a friend a couple of years ago. I don't want to spend my 50s doing something I'm not deeply curious about and excited about and a bit scared about sometimes. I want to have a crack. So,
well, it looks like you are having fun. I saw you posted a message about being at the Bitcoin Miami conference recently.
Yes, it was over there. I spend about a third of my time in the US, and then 2/3 here in Australia in Sydney. So that was great. I spent a lot of it actually, unfortunately, sitting in my laptop finalising some offering documents, rather than out there doing what I should have been doing. But nonetheless, that was a very energising place to be.
So, Glyn, you mentioned that you're not it's not the money that's driving you; it's something else. So what do you feel that you're providing to the industry, which can't just be curiosity that's driving? There must be, you must be sort of thinking, you have the mindset that you're providing something of value to them, you're making a difference.
Oh, sure.
So what do you think you're making a difference in?
I think the skills accumulated over the years in the TradeFi sector over many years, I think have relevance in digital assets, just no different from any other part of the financial ecosystem. So at the moment, I spend a lot of time working with Bitcoin miners who are both clients, and there's one that I work for. And I think my skills historically being a divisional CFO and being an FP&A type, being a controller, I think they're very relevant to those businesses, thinking about capital allocation, how they raise capital, how they deploy it. Unlike banks, though, I'm dealing with CapEx heavy businesses. So when you look at building a data center, you're asking yourself about question: if I spend a certain amount of capital, how long will it take me for that is deployed and yielding? Things like depreciation really matter. Thinking a lot about energy contracts, which is highly relevant for data centers and customers that you'll onboard there. So I think a lot of the skills that you either do as an FP&A or a CFO really relevant. And then for me as an entrepreneur with my own business, where with a couple of colleagues, we do intermediation in capital markets and also do some consulting. You've got to be out there selling. You've got to find people that where you can convince them that your skills can make a difference. And usually for me, that's helping them raise structure and raise capital and do it in an innovative way. So I like to think I've got some skills in that regard, and they're getting better every day. So time will tell.
Good stuff. No, it's really good to hear. And so the work that you're doing now, you're actually structuring transactions to provide opportunities for investors to invest in this new blockchain space. But then you're also helping, miners and other companies raise funds. So what skills did you develop, during your time in banking, which you can apply to this sort of new area which you're working in? And what skills didn't you get from your time in banking that you had to learn in the last 2 years or a few years?
So look, I think by being a controller, which I have been a couple of times in my banking career, you learn a lot about the basics of accounting and the basics of balance sheets. That's helpful. In small growing businesses, they don't typically have the privilege of big, large, established finance teams. You overlay digital assets where the accounting is frankly tricky and not always intuitive, and the guidance is not always clear. I work most of my time at the US GAAP. So there's lots of skills there as a controller that I think are really, really relevant to those businesses where you can add a lot of value. And then as an FP&A professional, a lot of those skills of, well, what are your margins like? How consistent? How volatile is your EBITDA? Some of these things, while the metrics might be slightly different from what you use in the bank, the premise of investors want an income stream where volatility of income impacts debt servicing ability, and volatility of income reduces the appeal for equity. So those same skills are relevant. But then perhaps some of the ones that I've had to get much better at is as a banker, working in big banks, I never had to go raise equity capital. I never had to go raise debt capital. A treasurer went to go raise debt capital, and they did that as part of a very clear treasury program. And there's some skills in that, of course, but there's also a process for it. Now I've had the privilege over the last couple of years of helping a couple of businesses raise debt capital. So structuring it, negotiating that with providers of that capital in the bilateral form. And now I've just been working with a company called Comet on structuring a Bitcoin denominated offering with an all asset security pledge. So things around, well, how's the intercreditor agreement going to work? Exactly what covenants are we going to have in the loans? Some of those things are things that when I worked in a markets business and I assessed transactions, part of a structured transaction group, you would review those things, but you wouldn't write the documents. Now I'm in there writing the offering memorandums and negotiating with the lawyers on the terms. So there's a twist on those skills that I've had to acquire, and still got a lot to learn. And probably the last thing, which has been the biggest challenge for me, is working in big banks. I've never had to sell. I'm a back office guy and middle office guy, and occasionally a couple of times I worked in sort of coverage teams, but fundamentally I didn't have to sell. Yeah. Now I'm out there. I have to find customers. I have to provide a service that they value and they'll pay me for. I have to negotiate with them on price. I have to have discussions about risk sharing. And then overlay on all of those, part of our business model is we make principal investments. So I've made 3 principal investments in the last, outside of my own business in the last 2 years. And each of those has required me to with a colleague, do a lot of assessment about, do I like that business model? What don't I like about it? Can we add value to it? Before I go and put a slug of my last 20 years of savings into it. Yeah. So lots to learn. But one of the things that's great actually about digital assets is, for the most part, I find that the people in it are a pretty curious mob, and there's so much food on the table to learn for everybody, and it's changing so quickly that I find it an industry which is more open to new players, and for networking and learning, and that makes it yeah, that makes it fun, a bit easier to break into as well.
Good stuff. Good to hear. And probably just finally, what of the stuff that you're learning in the industry that you're now involved in the blockchain, digital asset, Bitcoin, Ethereum, all those different blockchains and layer one, layer twos. What do you think is going to make its way back into the traditional banking or traditional finance market? We've already started to see stable coins being used by the bigger banking organizations to facilitate faster cross-border payments. Aside from that, what else do you think is going to impact the people working in banks, particularly in the finance teams?
So one of the things I think is, so this doesn't really into the finance teams, but tokenization, particularly of liquid assets, which allows you to allows a wider pool of investors to participate in having exposure to the same liquid asset, and then which not only fractionalizes but can also increase the liquidity of it. That's something that's been talked of for a long time, but hasn't happened in scale. I think for lots of valid regulatory reasons, but I suspect it will happen, and I think that'll be really, really interesting. We're already seeing blockchain technology being used also in provenance. So you see that with carbon credits, and I think we'll see more of that. So that'll change the business model. With all of these things, I think the value of intermediation falls. So we can go through the last 20 years of institutional banking, and there was a time when an equity broker would sit there and take voice calls and take a clip. Well, that disappeared. For the most part, it's disappeared now in fixed income as well. It's still there in a liquid credit, but I think over time, you would expect the value of connecting buyers and sellers of capital on homogenous risk to just get disintermediated. And I think that'll continue, and blockchain will help it, help accelerate it. But for the finance teams, I guess the people in the banks, it's not really related to blockchain, but one of the things I think is so fascinating is if I think back to what my calendar used to look like when I worked in a large bank, how many hours of my time was spent not in deep thought, but in governance and orchestration, setting priorities for many teams, ensuring one set initiative was connected with another initiative, fundamentally helping the organization not get in the way of itself. It was very, very high percentage, like certainly over half of time. When I deal with smaller organizations, the percentage of their time that they are spending on that, de minimis. Everything is about the product. Everything is about finding the product market fit and serving customers. So even the finance teams are incredibly focused on that in the smaller organizations. So I think one of the interesting things about what's happening with banking is, with one sense, regulation is driving greater concentration, certainly in the United States, in the biggest banks. And then at the same time, the guys in the middle, which in the US is the regionals, hasn't really happened in Australia yet, but the guys in the middle of the regional banks are really getting massively compressed. And then you have all of these emerging players coming along that are trying to pick off the bits of the value chain where they can take the most. So I wonder what AI and really genuine agile organizations can do to the big guys. And then at the smaller ones, I think that requires a different set of skills. So if I was going to spend the next 15 years in one of the bigger organizations, which I don't think I will, but if I was, then I'd be getting very, very good at understanding how I could make that orchestration more efficient. Workflow, AI tools, all of that sort of stuff. And if I was at the smaller end, well, then I'd be spending all of my time figuring out, well, how do I evolve product a lot quicker? Because those smaller organizations don't value orchestration because they don't have whole teams fighting with each other in a bureaucratic turf war.
Yeah, sure. All right, that's really, really interesting insights. Before we wrapped up, is there anything else that you wanted to share?
No, I just encourage everybody who's either working anywhere in financial services in the big bank, wherever you are, just keep learning, doing things you're interested in, work with nice people, and enjoy every day.
Yeah, excellent advice. I think the older I get, the more I need to work with nice people, decent people.
Hoorah.
Yeah.
Hoorah.
All right, Glyn Jones, thank you for your time.
Pleasure, mate. See ya.